Offshore, Off Script, a podcast by Fedgroup in partnership with Verum Capital. Right, a warm welcome to everyone online on this chilly winter's morning. We are super thrilled to have you all online. I can see everyone joining. And we're really looking forward to just having a great sort of off-script conversation this morning. So Offshore, Off-Script is just all about debunking the myths around global wealth and investment, and just getting into the nuts and bolts of what it is and all these weird and wonderful terms, and just really trying to sort of educate and help you sort of along the journey of navigating these overseas and global wealth and investment decisions. So yeah, we plan to debunk a myriad of myths. But Macy is right up front now. Welcome to these esteemed gentlemen here to my right and left, from Verum Capital. We've had a wonderfully long relationship with Verum Capital over the last few years now, and we're so sort of grateful for all the specialist skill that you've brought to us here on navigating and helping our financial advisors and their clients navigate this very sort of treacherous, exciting, and nerve-wracking global wealth and investment journey. So, to my right-hand side here, Timo Bernhardt, founder and CEO of Verum Capital, and I must say, genuine Swiss banker. And you'll hear just now by the accent. And that's the important thing. It's around bringing you the real facts and the real important information here. So a real live Swiss banker next to me here, which is really, really cool stuff. And to my left, Xander Drotsky, head of asset management for Verum Capital. Xander, wonderful to have you here with me as well. So great to have the team here together. And as I said, partnership is everything. And we know that the specialist skill set you bring is huge. And, for everyone online, I mean, this is part of this important imperative and empirical around Fedgroup bringing you stability and simplicity around your investments and just making those decisions and making it simple for you to understand, and simple investment offering now, as well as importantly bringing you stability. And I think that's why we're going to focus a bit today around this conversation about Switzerland, with all your experience, Timo, and talking a bit about it as the first one. But importantly for everyone online, the last sort of 20 minutes, 15 minutes, we want to dedicate to questions. So if you have a question, please pop it on the chat. And importantly, then we can get to those questions at the end of the conversation. We certainly will be attending to all your questions. So don't be shy, put your question in there, and we'll attend to it thereafter after the podcast as well. Down the series, this is a series of podcasts. We're going to be talking things like offshore structures, trusts, Lombard loans, structured products, banking, custodization, AMCs, PCCs. For goodness sake, these are all these incredible terms that are part and parcel of this wealth and investment global decision that we're wanting to make now. So please, everyone, put your questions there, and we'll be taking it as we go. But really, so first up, Timo. So you are here. You are born and bred Swiss national. You choose to live in South Africa. Tell us a bit about you, why you do that, why you here, and why you started the business now. We'd love to know.
Yeah, great. Thanks, Paul. And a warm grüezi miteinander. That's Swiss German for good morning. I've been asked, to explain a bit, and I've been asked this question a lot, why I would come to South Africa from Switzerland. And I think there's only one word, is like opportunities. I mean, you wouldn't believe, but, almost to the day, I've been a Swiss banker for like 40 years. And I started in 1986, with an apprenticeship. That's how you're being introduced to the Swiss banking industry. And then you just keep growing. And I've been growing in the industry until like 2018. And this is when I decided to come to South Africa because for the last most probably 20 years, I've been traveling to South Africa. And as a Swiss banker, as an MD for a large Swiss bank. And when I was here, I saw there was gaps, in the knowledge, in how people are using offshore and an offshore offering. So I thought there's an opportunity for me and my wife to come here and start Verum, and that's been good. So wonderful. For 5-6 years, we have been able to reach out to a lot of advisors, to a lot of FSPs. I want to share my experience. I don't want to keep them because it's valid. It's valid for this market. It's valid for this market to be able to compete to places like Switzerland or the UK. And so I decided to to come here and just help you guys understand better on the ground. And
I mean, do you remember that? I mean, when you came here and you bought your home in 2018, do you remember what the rate of exchange was, just for interest?
That's an interesting one. Yeah, it is. Look, it was in 2018 we bought the house. The rent was at I think 1460.
Sure.
And if I was to buy a new house, build a new house today, we would build at 18.
18, yeah.
So my strategy was always, keep your monies offshore and spend it in South Africa as a hard currency, and that's a very good example on how a hard currency or offshore banking will help you to actually keep the value, steady in your investments. Yeah.
So I suppose, I mean, Timo, we crossed paths and we met whilst doing some work for Swiss banks, and the Swiss banking and wealth and investment jurisdiction is obviously synonymous for quality.
Yeah.
It's not just the Swiss watches and the wonderful chocolate that you get there and the beautiful pisted ski slopes. It is this mystique, and there's this the story that goes around Switzerland and why it's sort of one of many, but really sort of stands out head and shoulders, in other jurisdictions around a really sort of safe, stable environment. And you must have such amazing stories, having been born and bred and lived through this sort of the last 30, 40 years in Swiss banking. I mean, are you willing to share some of these stories? I mean, I would love to hear some of these amazing stories and where we come from.
Yeah, I mean, if I can take a few minutes out of it, and it is amazing on what you go through, when you're like, in that industry, and you have been just given a career in Swiss banking. It is something special, and I always treasured it. And I mean, you look, a story in 1986, it goes just back to my apprenticeship times when, today the digital age is just like, has been destroying all of it. It's now all digital and no like manual work. But in 1986, so there was a guy, obviously a lot of guys own shares. And as you may know, if you are like older, you will know there's share certificates. So there used to be share certificates. They were not in banks deposited in portfolios and whatever, displayed as a digital item. It was actually the people coming to the bank, cut off, for example, the coupon of a share certificate. They would come to me. I would type the credit advice of that dividend credit, and the client would be credited, the dividend. So there was like a typewriting type
manual,
of manual thing. Then I think, today everybody talks about KYC and FICA and AML, just maybe a short story to know your customers, the KYC, which is very important, obviously, in the industry. And so this goes back to early 90s type of age where, we didn't ask people for their names or passports.
Yeah.
They would just come in and say, I want to open a bank account in a code's name. We had like codes. So somebody was to call, I remember a case. The guy was, and it stuck in my head because it's so funny. It's actually, he wanted to be named Mickey Mouse.
So he wanted his account to be named Mickey Mouse.
Yeah, we opened an account in the name of Mickey Mouse. And the problem later, obviously, Mickey Mouse died and Mickey Mouse didn't have.
What?
Must have.
Must have died.
And so there was no finding out for us who would be inheriting the funds because there was no address, no nothing. So this we can just see how the banking industry has actually evolved over the years and has it made a safer place. And the last story maybe, an AML and anti-money laundering story was a fun one, like 90s. I worked in Canada out of the Bahamas. And we were introduced to that Canadian Quebec type of hockey team.
Yes.
And not long after, each of these hockey players would show up in Switzerland with literally their hockey bags full of cash.
Hockey bags of cash.
Full of cash. And nobody asked, what that was. We assumed it was their earnings and bonuses and things, what they have ever gotten. But, they would come with these big bags full of cash, not even bundled, just like in the bag, on the table, in the bank. And I needed to count and just credit the account.
You had to count.
So there was no like AML process, stuff like that. And this is where I think today, if you ask me about the Swiss financial industry and how we're doing, I think we're doing very well because it's very well regulated. There's no unknown clients anymore, nothing like that.
Yep.
So I think it's being created. I mean, you can compare to the UK. They all started in the 1600s.
Yes.
The Swiss industry came up in the 1800s. The first Swiss banks, they were founded in 1864, something like that.
Sure. Incredible.
So we had like three Swiss banks, of which one I was working for is now merged with UBS, for example. So there was a lot of development, obviously. But I think, the myth about Swiss banking is always been in private banking, in investment banking, in asset management. And I think Switzerland kept its neutrality. And I think that's kind of the key, of all that. And confidentiality obviously is limited today because whistles were blown. The whole industry kind of fell apart in regards to banking secrecy and all that.
Absolutely.
But it's been recovered. I think we are in the multiple trillions of assets under management of clients, so it's undestroyable. I've grown up in it, and I think I can provide quality service. And with Sander and younger generations at Verum, I think it's important now to pass my knowledge on. And with this wonderful relationship with Fedgroup, I hope we can reach out to a lot of brokers and a lot of FSPs that will be able to adapt, what I have been learning, and I can now pass on, through coaching.
And I think that's the thing is that, the Swiss jurisdiction is, with my observations, is now it's almost kept some of the traditional ways and, that wealth, that custodian of wealth, it's no secret that, a large portion of the world's wealth is, custodized and housed in Switzerland. But obviously it's evolved dramatically now. I mean, as I said, nameless accounts and all those type of things. Now, the thing of the past. So it's an accountable jurisdiction, and there is reporting, obviously, that happens now. But what's important is that over 200 banks in Switzerland, that are highly regulated, well capitalized, and look after people's wealth and investment overseas, which is a big one. I mean, talking about stability, just a question for you. And specifically around Switzerland, there's this, and I've been asked a few times about this 100,000 or this 100,000 Swiss francs that the government in Switzerland, Reserve Bank, guarantee if you put money in an account in Switzerland. What's that about? Well, is that a myth, or is it true?
No, it's true. It's definitely true. It's not used as often because clients are invested in funds and in equity and bonds. But traditionally, it's called the Einlegerschutz in German, or in Swiss German, and it's nothing else but there is a guarantee of 100,000 Swiss francs per account. So, and we know it happens. We have just seen it. Banks collapse, even in Switzerland. The oldest bank just went down the drain, unfortunately. But if you had your money in cash with that bank, you would be guaranteed 100,000 Swiss francs. So that actually represents 2 million rand. And talking about like minimum amounts of this is a kind of the past. Like in the past, people would open bank accounts. They were multimillionaires, dollar millionaires.
Dollar millionaires, yeah.
And that kind of image or perception has carried on until today. People think offshore banking is something illegal and is something just for like the rich.
Ultra rich, yes.
Ultra rich, which I think we will destroy that myth here in this podcast, and we'll show you that this is not the case. So, but to come back to this Einlegerschutz, it is 100,000 Swiss francs for each account. If it's a joint account, it's for the account, not twice 100. It's for 100. If it's a trust account, etc. So per account, 100,000 is guaranteed basically by the government. It's
quite an amazing number. If you think about a couple opening up a joint account and investing money overseas in Switzerland, for example, if they choose to, and the current discretionary allowance is R1 million per person per annum. That first investment they make is in effect, obviously we know that you shouldn't just leave money in cash. It's not going to earn a return, etc., etc. You want to invest it. You want to go through the process of different investment options, which we'll talk to Xander a bit about just now. But again, if money sits in cash there, it's got this element of guarantee from one of the most stable financial jurisdictions in the world. You're talking about the credit rating of Swiss banks in general in the A's, A, AA2, etc., etc. So that's an incredible form of a sense of comfort that someone should have. Say, well, my money's somewhere where it's a big jurisdiction. I can travel there if need be. I can touch and feel the bank if need. That's a big one as well. Nothing you do, as I understand, has got to do with an online anything. It's got to do with physical. Knock on the door. Type of story now. So there's that real tangibility around.
Yeah, it goes back into the traditional Swiss banking type of, but mixed obviously with the new age. Obviously, our clients have access to e-banking and all that. But if you wanted to visit your monies, you just go and knock on the door. Yeah, that's what the people used to do, right? So they just go visit and knock on our custodian banks or stores and say, "Here I am. Show your passport," and then you'll get access.
It's unbelievable.
So it's very tangible. It's very structured. It's very simple. So what we do at Verum is, whatever we do is simplified. And that's why, Swiss banking simplified in our logo. And we don't want to create more myths around Swiss banking and offshore banking. We want to destroy them and show you that that's possible for anybody.
So there's that wonderful saying that goes with regard to generation of wealth, and generating wealth is around, you live in the sun and rest in the shade. I mean, you're literally living that, aren't you? You are living in the beautiful sun. It's a chilly Wednesday morning in South Africa now. Sun's shining. It's beautiful. But obviously, personally, you live by what you preach. I do. Your wealth is offshore, and I think a lot of people have once said to me, in my years of financial services, the more money I have offshore, the better life I can live in South Africa. It's almost that element around balancing. But the short answer is that, and one of the main reasons why we're doing this and we are starting this podcast is it is an undisputable fact that in anyone in growing their wealth and traveling on their wealth journey is that having a portion of their wealth offshore is key and exposed to offshore assets now. And just around saying, just giving, we want to give back a bit and sort of talk about how that's possible, different options, availability, people you can talk to, et cetera, and really sort of, from a Fedgroup perspective now, we're really on a big drive to really sort of bring the best of the best to our brokers and our clients now. And that's part of the reason why you guys are sitting here today. And I'm really, really enjoying that now. So, I want to swing from my right to my left here, and we'll come back to you, Timo, just now. Zander, you are Joburg boy? Yes, love it. So you've now been living in the sun for longer than Timo. You very much are the guy that sits behind the computers, looks at all the graphs, understands the markets internationally in depth. I want to ask you a question, but I want you to take us around a bit of what you're seeing at the moment now in the markets now. What are you seeing? There's lots going on now. It just seems that we are just inundated with things happening north of us that are affecting our money. Okay.
No, thank you, Paul.
And my one question up front now, if you could also tell me, there's so much talk about the dollar. We often miss this concept of the Swiss franc, incredibly strong currency. You're talking 22 Swiss francs or 22 Rand to 1 Swiss franc at the moment are very, very strong. And, my understanding is that there's an element of the Swiss franc that is still backed by gold. And this positive correlation. And that's why, tell me a bit about that there. There's this, we know about Switzerland as a safe jurisdiction. Talk to me a bit about the market. Talk to me a bit about, what's happening, why, the Swiss franc. What's so fancy? What's so wonderful about the Swiss franc? We'd love to hear.
Yeah, thank you, Paul. So even if you look at the Swiss franc, it's almost emblematic of that whole Swiss banking ecosystem. So even when we think about hard currencies or dollars, euros, and pounds, there's still some loss of purchasing power there over the years. And compared to the Swiss franc within that Swiss banking ecosystem, you almost have a safe haven asset without even quotation marks. You have an asset that, in a sense, acts like gold. Is similar to a hedge. It's even complemented with direct gold exposure, which is also one of the aspects that we love about the Swiss banking ecosystem, is that you have that flexibility to have a variety of different asset classes in a variety of different jurisdictions. And these all serve a specific, distinct purpose within a portfolio. So you're not simply only exposed to US equities or potentially to mutual funds, but you might have a variety of different structures within your portfolio. And in that sense, the Swiss franc and even gold exposure, as we've seen in the beginning of the year, has really acted as a hedge in those times of uncertainty. So even if we look back to the beginning of the year, fears around AI models, the Chinese model coming in and potentially disrupting the entire US large cap blue chip tech space, or even the unilateral declaration of tariffs through April, which, much akin to a COVID shock, really just caught markets off guard, even though some might have said it was coming. Just these things where people need a hedge, they need to protect their wealth, they need to have it both custodized in a safe jurisdiction, but then also have enough diversification where we're not necessarily saying one jurisdiction is better in terms of investing than other, but the future is inherently unknowable. And therefore, we'd rather have different lines and different waters and not simply be overexposed to one area. And I think part of that Swiss banking ecosystem is also saying we want to cultivate the idea of global investors or even global citizens. So for those people who might be in South Africa or out of South Africa for some period of time, might come back, your wealth is that stable, consolidated element that you don't have to worry about because it doesn't necessarily reside in the same jurisdiction where you are.
So, yeah, I mean, so that's the amazing thing. I mean, it's and this is there's such mobility of people, and thus, if someone's money and their wealth doesn't follow them, it seems fairly irrelevant whether someone is traveling, holiday, studies, internationally. I mean, I know. I mean, I call it the new modern family. The new modern family is typically characterized by that has got wealth. They've got, mom and dad, granny and grandpa call it, might still be an SA because they enjoy the sun and the warmth thing. But the kids are strewn throughout the world now. There's this element of these global families, and there's this unique aspect around Switzerland potentially creating this central hub of global wealth now that allows people to be mobile, and is all then relevant as to wherever people may want to live, breathe, exist, holiday, etc.
Yeah, and I think that's one of the myths we're trying to dispel here, is to say that we live in South Africa, Timo loves it here, we love it, but we believe in global investing, we believe in Swiss banking, the benefits of it, the security, the flexibility, even in terms of the optionality. So not necessarily, again, being just in equities or bonds, but tailoring bespoke structured product solutions where if there are certain requirements, you can really offer a tailored and specific product to a particular client or to yourself, and not necessarily just have to go through the traditional route. So really about putting the power in your hands and allowing you to benefit off of global investing, as many other countries have done now over the last 10 to 20 years, even longer.
Absolutely. I want to come back to a bit of the sort of optionality just now, but I want to remind everyone online, if you missed it initially now, please don't feel please don't feel shy to ask the questions now. Pop it in the chat. Pop your questions in the chat. We're happy to get to it now or afterwards. And that's an important one there. So please make sure that you don't miss the opportunity to ask those questions. So coming back to that, so just to declutter and demystify it. So it means that a good option, an option around your wealth is housed in the jurisdiction of Switzerland. So, and that's got to do with, the political stability and the regulatory prowess and the financial system that's so strong. We heard about I'm not going to try and pronounce that word. What's the word again there?
Einlegerschutz.
Einlegerschutz. There we go. Einlegerschutz. You should do that with some Swiss chocolate in your mouth. It might have a different ring to it. But it doesn't mean your money is in Switzerland or your wealth is now custodized, what they call the custody or the ownership or the jurisdiction in which your wealth is now controlled. It means now you've got now the world. You've got various different options now. It's just not just around equities, because it was a surprise to me, Zander. You spoke about the markets almost were surprised by the unilateral tariffs. It was a surprise to me, because it was almost, we're talking Trump. I think we've learned now that when this guy says something, he sort of generally follows through. Did the markets generally not think he was going to do what he said he was going to do? Or was there a healthy amount of, there's no way he'll do that, and they were surprised? What's your feeling around that?
Yeah, it's almost like that. I think a lot of people didn't expect, even though some promises were made, they must expect business as usual. And then we've seen good performance in the US market, especially over the last 2 years following the sort of 2022 bear market. But I think it goes to show that even in the US market, which at Verum we still preeminently favor as the best growing market in the world, as the one with the best prospects, it just shows also the risk of potentially being overexposed to one particular jurisdiction, or even equity class, if you can go that specifically, and just showcasing the reason why we believe in diversification and true global investing. So true global investing might not mean that you're underweight US, but it might mean that you're 45 or 50% instead of 90 to 95%, and also looking for different asset classes. So adding a bespoke structured product solution there for income generation needs, or to protect capital to a certain extent, just to ensure that you have that security over a, let's say, 6 to 12 month or even longer period. So it just goes to show that even in the sort of developed market, the safer jurisdictions that we might believe have less risk attached to it. There's always risk when we look at markets. But that's why we believe in long-term consolidated portfolios. We don't believe in day trading or short-termism. We believe investing for the long term, creating client value.
Well, I think we learned that lesson, didn't we? So the markets, and I'll never forget, it was the first week in April. It was that week, you know, and there was the unilateral trades that Trump announced, and there was absolute chaos in the markets now. There was sort of a mess everywhere now. There obviously comes back to the 101, you know, the knee-jerk reaction of sell would have really hurt you, because it wasn't much more than 2.5 weeks later when there was this reality check, there was a bit of pushback, there was a bit of sanity that then prevailed, that if not all of the sort of downside was, there was huge recovery in your asset prices now. And there's that element around sort of stick around, set your strategy offshore, and then stick to it now. And I think that's really coming back to one of the sort of, you know, almost learnings around these podcasts, is around, you know, stick to a strategy. And a strategy is a little bit more complicated when it comes to offshore. It's got to do with, okay, who am I going to partner with now offshore? Where am I going to now? How's my offshore wealth? How? And we're gonna unpack these things over time. I want to come back to you just now, Xander. I want to come back to this accessibility thing that's been ringing in my head here. Timo, you spoke about this accessibility. You know, Switzerland and offshore investing was always, first of all, there was that element around this cultural effect in South Africa around, gee, I shouldn't talk about it. And then there's this perception around Switzerland around only for the super wealthy. You talk about it's very accessible. I mean, how much does someone, need to actually open up a full offshore private wealth account in Switzerland? I mean, what's the entry level?
It depends what you want to achieve, right? But it can be very minimal amounts. Some of our custodians, they accept small, really kind of small accounts where you maybe not be able to then go the whole
sort of package
like
strategy.
Kind of package.
Yeah.
We don't want to do product pushing here, obviously, but you know, the Swiss banks have become much more open. There's some custodians that are still asking for like a $3 million minimum amount, you know, and then you could see the market is not providing for that, because we're dealing with allowances. Like the 10 million rands a South African would have, you know, to externalize. So 10 million rands in 2007 obviously was like double. Today it's like 500,000. So we through our company, we are obviously making it available at smaller amounts, and are more realistic, you know, for our services to be accessed by like everybody. And
I think that's an interesting thing around just general global, you know, centers of wealth custodianship globally. And I mean, it's a sure story I can tell is when I was, you know, working in the Swiss banking industry. It was an interesting where sort of, you know, obviously the big executives and the chairman, etc., would love to come out to South Africa, and I'll never forget the same story around this element of accessibility, and I think that's why it's certainly I've got a big heart for making the best that's available globally available to our clients and our advisors now. I mean, why keep it for, you know, I want to this concept of commoditization now. Make it available. There's no reason. And as you said, I mean, from if you can, you know, put your discretionary allowance down together, you could, you know, have a Swiss private bank account. But, you know, these execs would come out and they would sort of talk to me about, you know, the size of the accounts that were being opened and sort of compare it to the likes of accounts being opened in Singapore, Dubai, etc. And you could see straight away there was this lack of knowledge around the fact that we have something called exchange control. And there's only so much. So, you know, right now, you know, without special applications, you can only take out to 11 million, which is, I hate to say it, that's under 500,000 Swiss francs. Now, for a lot of global custodians, that is not enough. You know, and it's an element around making it South Africanized, and I think that's the big one around another myth that we want to bust is around this fact of it's far more accessible than you realize. Life has moved on, and actually, my understanding, and this is a big one around accessibility, is a South African individual, so a South African taxpayer, South African domiciled individual, they don't go through a heightened due diligence when opening up an account in Switzerland. We are not on, even though we are currently on grey status, and we know that there's really good sort of noises coming out there, and there's a good chance we might be out about October. There's not some heightened due diligence that one goes through as a South African. We are still granted this sort of clean sort of audits. I mean, is that true? I mean,
yeah, no, it is true. Okay, the Swiss banks, obviously, they internally, there's much more steps now to be taken to approve an account.
Yeah,
but we don't feel that as like intermediaries to clients. But the banks had to take measures, just regulatory wise and approval processes internally. So an account opening may take 10 days rather than 5, you know, today. But that's really all what we can feel. But I think what we should be stressing here, Paul, is maybe also the opportunity for every South African. You know, when I walk into a restaurant, I look at this place and say, actually, nobody of these people need a rand account.
Yeah,
they all should have an offshore account because they would be happy to deal with inflation of the rand or devaluation of some sort of the rand.
Because, for them.
Exactly, yeah. So, you know, I always tell Sander and my staff, look, just chat to the people and explain to them. But it needs that explaining, it needs that coaching. But also as a client, when you go offshore, you must be careful that you're opening an account with good intention.
Yeah.
You know, you must make sure that you're not raising any red flags. You know, in the Swiss banking industry, once you have risen a red flag, your account will never open. So this is where we support as well. This is where cultural barriers may come up a bit, you know, between the Swiss and
there's a huge cultural.
Yeah, so I can bridge. And
that's the bridge. I see that now. You understand, and I mean, my you know, working with you over the last few years now, you've managed to really blend that cultural. You know, sort of nuance, you know, which is a big one because people that is a huge dynamic around when you invest money overseas now, you are very much adopting the jurisdiction in which you house your wealth, their cultural nuances and their rules and their regulations. I think that's a big reality is that, you know, it's not just another account linked to your, you know, your sort of local bank. You are placing the money in the custody of an overseas jurisdiction now, whether you like it or not now.
Yeah. Look, Swiss banking may be a bit of a, you know, for clients or for South Africans, a bit like for me, the now thing, you know.
Yes.
When are you calling me like now? So I still don't know today.
Yeah.
You know, when is actually somebody calling me and they say now.
No. Yeah. So there's a South African cultural
thing. So yeah, exactly.
Well, that's
maybe
it can mean anything. Hey?
Yeah.
It can mean anything.
I learned in the meeting.
Yeah, that's it. So I mean, there's been a huge acclimatization to it now, but I'm glad that we're thrilled that you are loving your time in South Africa, and it's great to have you nice and close, and really sort of lending a hand, and it's just wonderful the work that you're doing with us at Fedgroup. I mean, coming back to Xander, coming back to your sort of asset management, so the deep analysis around assets, etc. I mean, what's your view? So we know equities at the moment now. So obviously my understanding is obviously equities, low interest rates environments. Now we're seeing, you know, inflationary pressures not coming through as quick as possible now. Could be good for equities now. Bonds, tell me a bit about what you're seeing in the bond market globally now. I mean, we obviously know inverse relationship between interest rates and price of bond, etc. What's happening there? I mean, what's happening in the bond market?
Yeah, so it's important to note that we have a very strong view towards the high yield space. So we think that when you're looking at 6 to 8% yields on barely sub-investment grade companies with very low rates of default and effectively guaranteed almost repayment. We think that's a very underutilized space, and we really think that there's a real opportunity for a stable framework of investing for people within, especially the American high yield space. We just think that type of yield profile is something that a lot of people are looking forward to. And again, within that rate environment, with the potential for further rate cuts later in the year by the Fed, I think we'll see quite a nice increase there and a short-term boost to client portfolios overall. So I think we like to have it as part of our overall house view, our sort of vanilla standard view. We like equities. Obviously, we're aware of the risks, especially an over-concentrated specific large caps.
Yeah.
And that's one of the reasons why we don't simply follow a strategy of the main famous, only the top 10 largest companies in the world, but we like to have a diversified global equity strategy as well. And then complementing that with that strong fixed income exposure just ensures a balance, sustainable and also responsible long-term portfolio construction.
Absolutely. So, as you know, as you've learned from a Fedgroup perspective now, we really have carved a niche out of the alternative space. And that's, I think, a huge directional strategic imperative around us around offering more and more sort of global alternative options, in partnership with yourselves. From what I've observed, alternatives in various ways and forms is a huge market offshore. Whether it be structured products or different type of private equity or private debt type of instruments now. Are these types of unique investment opportunities accessible for someone that's got their wealth in Switzerland? Or is it still inaccessible to the general sort of South African?
Yeah, the great thing with those structured product solutions is it's the ultimate tailored bespoke way of adding to your portfolio. So instead of saying I have to take the ups and downs with my equities, or I have to take what bonds give me, you effectively tailor whether it's a structured product or something more capital protected. You can make something that you really want and then see if the pricing gives you what you're looking for. So even as we know with bonds, there's still risk attached to it, even equity, even more so. And even if you look at something like a capital protection product, where if you can guarantee 95% or 100% of invested money with some upside gain, it's a very different type of profile and something a lot more catered to what someone might be looking for at some stage in their life, versus someone who'd rather have aggressive income generation for their current portfolio needs. So really it's about having that as a real complement to your traditional core portfolios, but just making sure that it works for you and showcasing that it's accessible. It's not something where it is a risky product necessarily. It's something that you can change, tailor to how you need it. And it's something that we're really excited to really showcase and highlight how this can add value to clients and their portfolios.
Yeah, because I suppose when you're talking about having your wealth building offshore, you're talking about just a market that's just so big. We've done, our Johannesburg Stock Exchange, our JSE, albeit very limited, very small, has done incredibly well, as we know, over the last while now. It's been hard to beat, to be honest. And a lot of things are very sort of leading indicators are very much in favor of it now, sort of getting on a grey listing, potentially some strong capital coming back into South Africa now, reducing interest rates, good for sort of equities, listed equities, with regard to easing debt levels, etc. Certainly the right noises happening from a political perspective in South Africa. We obviously know the instability, anything could happen, but you're saying that there's so much more availability offshore when it comes to then looking at options to fit the strategy and what you're trying to achieve. That's really where the market just grows and explodes.
Exactly, and you can see that. So South Africa is looking good performance locally, but again, the mantra is more focused on it might be great in the US, it might be great here, maybe it's great in Europe over the year, maybe there's positive movements in Asia, but really to promote that global investing mindset and really invest everywhere that you can, so that if there is a downturn decade or a period where a certain asset class is struggling, you really have the ability to be exposed globally through, in our case, the Swiss banking ecosystem, to a variety of different assets and geographies to ensure that over the long term, regardless of short-term specific events, your portfolio will grow handsomely and responsibly over time.
Absolutely. So, I'm going to come back to both of you, and maybe Timo from your, I remember in my early days, working in the private banking industry in South Africa, whenever someone sent money overseas, there was this, I'll never forget it, was this 7-day abyss where the money wasn't there and it wasn't there. It sort of was, it was in limbo somewhere. This is again, coming back to this accessibility and transparency. It's not real time, but it's almost what I say now, when you transfer funds overseas now, it's almost like an interbank transfer now. There's a short period of time now and it pops up there. And you're talking about visibility. You mentioned something earlier around the evolution of traditional Swiss private banking values around, custodizing someone's wealth, looking after someone properly, in the traditional way, but modernizing it now with regard to AML and also if someone has their wealth offshore in a Swiss private bank, can they see their money? How do they check on their portfolio? Obviously, they'll have their financial advisor that will be navigating, but can they see their money like you would locally?
Yeah, no, they can. I mean, that's also new age, I guess, in Switzerland. But there's still like clients that may be a bit elderly. They don't know how to deal with e-banking and all that kind of new age things. So it's all available, and what we make and stress a lot, I guess, in Verum is the educational part. We handhold our clients through the product ranges, choosing the right investments for them, and even if just simply holding cash. There's benefits to doing that, so we do a lot of that, like in between kind of line type of work, rather than standardize everything to everybody. So yeah, we can, and we have the scalability now to be able to just take care of every client like individually, and this goes towards like proper Swiss private banking.
Which is now so much more accessible.
Yeah, absolutely. And look, our investment processes have been simplified. There's nothing complicated about it. When you're here locally and you're asking for offshore advice and you're just being given advice and not explain the whole thing. This is what kind of also disturbed me a bit, that the people don't necessarily go the whole 9 yards to explain to the end, where's your money sitting? Is it now sitting in the US or is it sitting in Switzerland? How do I get access? Is my relationship to a bank contractually personal, or is it like in a nominee type of situation? And in our case, I can say it's all in a personal capacity.
So it's your account.
It's your account. It's in your personal name. You're contracting with the bank. You're hiring us as the intermediary to build these bridges, to get rid of maybe problems you may see or not see. So that's where we come in, and that's what's available. And it's going to be, so coaching education is a big
one.
It's a big one. Also in down markets, like Sander was describing, you must be close to your clients. You must explain why, because if the client doesn't hear from you or an advisor, then he will feel neglected, and he's going to change banks 100%.
Yeah.
So that's all what's coming out of my Swiss banking years and time, just realizing how to treat people the Swiss banking way, but also mix in now the modern age.
And I think that's a big one, is around this element of education. Is a big sort of it's a real golden thread in a lot of this, is in the sense of not just when you choose to use a Swiss bank as an option to custodize and to hold your wealth, it's actually, what I'm hearing from you is that you like to get that person to understand what they're doing, to feel it, as opposed to just, it's there and it's something that exists in the ether, and as an understand it, feel it, which is, I think, a great educational element going down the line. What I want to do is there wanted to some interesting questions coming through here. So there's an interesting question that's come through around tax reporting, and I think that's a huge one. It is around this element of, now my money's overseas, how is it taxed? Okay, which we won't tackle today, but I suppose the big question is do you do tax consultation? Do you work with someone that can consult on taxation issues, etc.? How does that work? Because this is another nervous thing now. My money's been sent offshore. Obviously, tax authorities know it's been sent because it's gone through the relevant BOP process or whatever it might be. But now, how does it work now? Obviously, we know that most individuals, and especially at Fedgroup now, we work with a wonderful bunch of great independent financial advisors that would then help guide these clients, not necessarily on tax matters now, but will get the right consultants in. Is this something that you guys do as well? And what's your view around tax and overseas?
Yeah, look, I gave you now an insight into Swiss banking. This is, I think, where we can add value, like giving you that insight and understand fully, even if it's just about the tax reporting. So if you open a bank account at a Swiss bank, they will categorize you as a South African. If you move from South Africa to Denmark, they will categorize you as a Danish. So this is going to then trigger a change in their system, where if you're still here in South Africa, your tax reporting is going to be done based on tax laws in South Africa. So every end of February, you'll get your tax statement.
Yes.
That's an optimized tax statement.
Okay.
You can't use one-to-one with SARS. It needs to be worked through with your accountant. But there's going to be your capital gains, your income, your fees, everything you need to be reported. If you then move and decide to go to Denmark, all the bank will do is going to change your tax domicile from South Africa to Denmark.
And they then report to that
And
relevant tax
then the
authority.
Danish may have, I'm not sure now, I think there's end of year tax reporting for them. They will receive a tax report. So it's all optimized, it's all available. It just needs to be used and explained to the customer.
I suppose what you're alluding to there, which is quite important, is the fact that if you, for instance, in that case, let's use a typical South African example now. If you then move to Australia, Canada, UK, these type of places now, it doesn't mean your wealth then where you house it becomes irrelevant and it has to be this massive change. Other than, obviously there's one thing regarding changing your tax domicile, but if you then choose to move, it's consistent. It's a stable, consistent place that's accessible. Whenever I'm at the airport, I always look at the international flights. There's always flights going via Zurich now. It's this really nice sort of central place to go. It's a very important one. There's another element I want to bring into this one now, is that I think what Switzerland have done really well, and what they've sort of been quite firm on is jurisdictions around the world where they believe don't handle their financial reporting or AML triggers well, they don't open accounts for those type of individuals now. For that purpose, my understanding is that you also offer a Mauritian-based option as well, but that's very much when the tax domicile or the residence of the account holder is not approved, as in it's a high-risk country or whatever it might
exactly.
be.
So the Swiss banks are moving along like risk matrices. They obviously, the continent of Africa is a bit of a special one in regards to corruption and other things. So there's a provider out of Mauritius that will help us to understand the risks in Zimbabwe or in even Kenya, even Nigeria. It doesn't mean that if you deal with Africans, that everybody is like a bad person.
No.
So obviously there is enhanced due diligence, but we have secured a custodian that understands these African risks. The Swiss banks won't touch that risk except South African and some Mauritius risk, but the rest of Africa is a bit difficult.
Yes.
But we have available.
There's a solution. You're seeing that more and more. There's elements around that there, but traditionally it's a backup option. But again, the Swiss option is just the ultimate.
Sure.
There's another question that's come up here, just talking about offshore global endowments. So that's obviously the wrapping of assets offshore now. That's not something part of what Verum Capital offer now. It's very much become a very, very sort of, I think the last number I saw in the industry was about the $15 billion worth of investments have gone out through your traditional global endowments, which are then operated by some of your larger life licenses. I know certainly Fedgroup perspective, we're looking at options like that, having our own life license now as to how we custodize assets offshore through the element of life companies, etc. now. But the important thing that still stays central is the fact that it's the jurisdiction of where the money is. It's around that stable, politically, financially regulated jurisdiction now. But that's not part of what you guys are doing now.
No, we would look in future up to Fedgroup obviously to provide that. And for any client that decides to go offshore, you just got to be making sure that you're building a relationship, with the bank as well. Just not like with us, with the intermediary, but you want to be seen and heard and known by the bank. So in case you need somebody else to talk to. And it's important that you build that relationship. Maybe you're running a business at some point. You want to use your offshore connection, maybe for business purposes.
Yes.
You will need to know that you're in a safe place and your jurisdiction is stable and recognized as such globally by your business partners. That's important.
Yeah, and I think that's like getting to know. There's that element of, that direct relationship with offshore under the advice of your advisor here in South Africa. Now you've got that relationship. You've got this. It's true private banking, isn't it? I mean, that's that real sort of holy grail of private banking. It may be one thing I wanted to ask, and it's an interesting one now. Have Swiss banks got their head around crypto assets? Are they getting their head around it now? Do they custodize crypto assets in any way now? I mean, I know the world is looking at it. It's a big one. I mean, Xander, maybe I can ask you. I mean, what have you?
It just shows the development and the real evolution of the industry, where even one of our banking providers allows for full crypto asset custodization. So
amazing.
At our own view, we don't necessarily have an opinion on that, but it really allows for that flexibility, again, with a variety of asset classes, whether you view this as more a currency or an alternative asset class or a commodity. It just goes to show that you can have all of your investments and cash in one space. Whether you want to take part of it or not, that's completely your decision. But just goes to show the evolution within that banking industry, where even these new tech, maybe ideas around tokenization, fungibility, it's just becoming more and more cater to what people are looking for, and that flexibility of not having 10 separate platforms and then not knowing where things are, and passwords all over the place, exactly. And really have a consolidated perspective. So it's very interesting to see that that's now something we're viewing.
So that's an amazing. So you're saying that instead of if I had crypto assets and I decided I could actually use my Swiss bank account, my Swiss account, to custodize, to actually hold those crypto assets now, instead of a typical crypto wallet.
Yeah, exactly.
I mean, surely that's an incredible element of stability and certainty and comfort, knowing that my crypto assets, whatever they do, price-wise, and that's always the golden question, price movements, but it's unlikely that they're going to disappear.
Yeah, exactly. You have full banking authority and due diligence and really security there, alongside the same security that would lie within your mainstream investments.
So, I mean, again, there are no other major questions that I want to attend to. I mean, last words from you guys, and we can sort of wrap it up this morning, and then look forward to our next session. Anything last from you guys?
I think we covered a lot, eh?
Yeah, we covered a lot, absolutely.
This morning, and I'm just looking forward to develop that podcast sessions, and I think there's lots of interesting stuff coming up. I'm going to be here. Sandra's going to be present as well, and others.
Absolutely, and yeah, exactly. Bringing in the experts, bringing everyone to really sort of bring it together now, and also just sort of it's around that demystifying, decluttering global wealth and investment now, and also I suppose just giving the sense of what else exists there, what are the platforms available now, and really sort of really employing people to really sort of look at what's best and look at actually what's available. So yeah, I mean, again, look forward to, we haven't even spoken about it this morning, but it'll be a topic of a specific episode of this podcast, is around the fact that I can lend money overseas.
Yeah,
I can lend money against my portfolio.
That's an important one, yeah.
I mean, that's a big one. It's called Lombard lending. Hey, it's got nothing to do with the tires.
No.
Nothing to do. The tire company does not do that. It's got to do with, lending money offshore and how easy that is and where it fits into a strategy. So that's the thing we want to talk about, is how does lending money fit into an investment strategy and a growing your wealth strategy, et cetera, et cetera. Structured products. I mean, I think there's an incredible conversation to be had around structured products. What are they? What do they exist? How are they built? A lot of the current structured products we're seeing in the market now are built out of those Swiss European markets. That's where they were born. So that's an important one. So, you guys are the right people to help us understand how those are built. What are the mechanics? What are the risks? What are the trade-offs? How do they fit into portfolios, et cetera, et cetera. So really, as in the audience is to then equip you to actually then make better decisions down the line now, and just really sort of, just talk the facts, talk the real angle as to what's going on offshore. We look forward to obviously having some market sort of insights from you every time, and Timo, obviously you bringing your true Swissness to the conversation now, and being a true global citizen around the table, probably the only one here if you can talk from facts. Absolutely. So thank you everyone for joining me, Xander and Timo this morning. We've really sort of enjoyed sort of imparting some of this sort of understanding and knowledge now, and we wish you a wonderful week further, and we look forward to hosting you in the next Offshore Off Script podcast.
Offshore, Off Script, a podcast by Fedgroup in partnership with Verum Capital.